Hello, everybody, and thank you very much for joining the FX London Open Breakfast with myself, Kathleen Brooks, on what is quite a sunny day here in London, thankfully. Okay, let's get started. There can be no denying there is some major moves going on in the market today. We are a very good way, I think, of describing it is that, the dollar is strengthening across the board, even against the yen today, which we'll look at a bit later. But basically, this dollar strength is really hitting some really important levels, and levels that we've been talking about in these webinars, levels that the market have been talking about generally, and levels that are going to be respected by the market. So the fact that we're testing these levels highlights just how serious we are. So that's the technical picture. Obviously, the fundamental picture is incredibly weak. I mean, basically over the last 2 weeks, we've seen election outcomes in Europe, so in both France, but also obviously, more worryingly in Greece. That's really heralded this next kind of perilous stage of this Eurozone crisis. So essentially, as Greece goes to the polls again in June, as it hits this kind of crisis of potentially not receiving any more bailout funds, or potentially defaulting, of a potential disorderly exit from the Eurozone, we believe that will continue, and there could be even more pressure on the euro. Now, I'm going to go through levels in a moment, but just one other thing. Those of you who were trading this morning will know that there was obviously another dip lower in sentiment. Where did that come from? Well, it came from a headline from the Wall Street Journal that's now been kind of picked up by everywhere, really, showing just said that the head of the central bank in Greece has come out and said that there has been an unusually large amount of deposits being withdrawn from Greek banks, which now makes a Greek banking sector collapse more likely. The one thing I would say about that, I was asked about this yesterday, and obviously the banks mixed with the sovereigns, there's kind of this symbiotic link. As an economy, really, you can't function without your banks. That's why they're so important. Someone asked me about the banks and the chance of them actually collapsing, and I said, well, you know what, the Eurozone did put 30 billion euros worth of money aside to prop up the European banks. So let's see where that money is, and let's see if that comes out today. But first of all, just bear with me one moment while I pull up my chart. But, how can we not talk about the euro first? This is a daily chart, really, really nice. And look how close we are to the lows of January, and that's what I meant. This broad-based dollar strength, and we'll look at the dollar index in a moment. But that is it's really hitting these all-important, lows. It's getting us to test key support levels. Obviously, right now we're around the 126.90 to 85 to 90 mark. We've been as low as 83 today. Obviously, that opens the way to 126.24. Why is 126.24 so important? Well, that is that low from January, so you can't really see it here on this chart, but trust me, it's 126.24. But for ease of access sake, say 126.20. You've then got 126.05 ahead of kind of 125.70. That's another big level that people are looking at. For that, we're going to take a look at our weekly. But as you can see, this is a long-term chart, goes all the way back to 2009. Euro looking incredibly vulnerable now in its range. And the thing is, obviously this is a big level. Even during sell-offs, things don't go down in a straight line. We do see pullbacks. However, sometimes there's some situations that means that the pullbacks are much shallower than the kind of selling pressure. And I fear that we're in that situation now. People have been looking for this collapse in the euro for the best part of kind of 2 years. Those of you who kind of follow the financial press or the business TV will know that there've been tons of people calling for it. Oh, the euro is going to get down to parity. It's going to do this, and it hasn't. Well, right now it feels like the bears are in a bit of control. And yes, 126.24 is going to be a big level that is respected by the market. However, a lot of people talk about it. Just because a lot of people talk about it doesn't necessarily mean that things in Europe have got any better, or that the euro's any more attractive. It just means that some people, because it's the low from this year, once we get below there, it takes us to a new paradigm, if you like. It takes us to the low of kind of 2 years ago. And because of that, we can see because of that, we could see a bit of buying interest or more like profit taking. Basically, using the CFTC data, which monitors the number of shorts and monitors the numbers of speculative positions in a currency. Well, in the euro, those numbers have been falling quite sharply. Long euro positions have been falling quite sharply. There are some of their lowest ever euro levels, but that doesn't necessarily mean that more people won't. If anything, if we were to get below this 126.24 level, we think that could intensify the selling pressure in the euro. The reason why is that some people will then be looking for a move down to 120. The euro has always been quite difficult to trade on the downside. As you can see, just looking at this chart, it's all quite choppy, that's for sure. There are sharp periods whereby it falls very sharply, as you can see. Now, this is obviously a monthly chart, a weekly chart, sorry, so it's not it's not showing you kind of exact levels or anything, but it just gives you kind of a good sense of, you know, how the euro has been performing basically since that high in 2010, when all this Greek crisis started. You know, we've not been able to get back to above that 150 level or that 160 level. Looking very, very weak, but as you can see, it tends to go down. When it's falling really rapidly. But even in periods when we've seen massive sell-offs, like we did back in early 2010, we still get sideways moves. We go down, we move sideways, we go down, we move sideways a bit. We then find a bottom, we retrace. You know, that's kind of the way it goes. And we've had such selling pressure here that maybe around this 126.25 level. Obviously, depending on what goes on in Europe, but now we know that we now know that Greece is going to the back to the polls. We know that there have been deposits being taken out of Greek banks. Now, you know, I'm not going to predict anything because you know, you can't in this situation. But a lot of the bad news is already priced in. So that does not mean that euro is going to go lower. We think it is, because obviously we need to get the results of those elections. We need to see whether or not Greece is going to leave the eurozone. But it does suggest that maybe around this 126.24-ish level, or 126.50 to 24, you might just move sideways just a little bit, just ahead of that 126.24 level. That would be very, very normal. I'm going to show you the daily chart. Now, I put this up on Twitter for those of you that follow us with Forex.com just a little while ago, and I said that, you know, on a daily RSI basis, as you can see here, looking oversold, very, very oversold. This is a daily chart. When the daily RSI falls this low, that's when it starts being a really significant level. Let's take a look at a more shorter term, so on the hourly. So as you can see, exactly, it's happening already. I actually said in my tweet that potentially we could see a pullback to that 127 level, maybe even to that 127.30 level. But we still think that any strength is going to be used to sell more euros. But it's just that, you know, as I said, things don't go down in straight lines. Things move sideways a bit. Going back to that weekly chart, as you can see here, you know, we had basically kind of three-figure moves. This is a significant move from the low, just this first leg lower at the beginning of 2010. We reached low around kind of 122.50, say, in euro dollar, and then we kind of jostled around there between 142.50 and 144.50. So there can be sometimes quite big moves when we're going kind of moving sideways. But I guess, you know, some people could argue that actually this move here since January has been that huge sideways move, and that now we're really getting some traction. So it is kind of certainly worth taking a look at. Now, as I said, broad-based dollar strength is really eroding things. Now, someone's just asked about, you know, 128.70 is to be retested. I mean, you know, it could be, you know, 128.70. I think with things like this in this environment, don't go targeting levels like that necessarily. I couldn't tell you for sure if I thought 128.70 was going to be retargeted. Looking at it from a daily level, as you can see, you know, we have moved very fast. We have got, you know, we are below the key moving average levels here. We are looking at the RSI. I am a little bit concerned, but I do think that the markets are incredibly jittery. As I said, you know, any kind of we are getting more and more negative headlines. It's almost like, how bad can it get? Well, you never want to test that because it can always get worse. The market is moving on the political situation in Greece. It's moving on hits to their banking sector. The fact that only 700 million euros worth of withdrawals were mentioned in that Wall Street Journal article. I don't know, it just suggests to me that maybe there's probably more that's going to happen. The big risk, I guess, the risk event is that if that starts happening in Spain and Portugal, or Italy even, I think that there's a good chance, as I said, I'm keeping my time frame pretty small. I'm looking at a pullback to kind of the 127.30 area. Let's take a look at the point of figure chart, because the point of figure chart is always great for levels. Just bear with me. So in terms of, as you can see, oh no, you can't see. Wait, here, one moment. There you go. You should be able to see now. This is euro dollar. This is kind of a historical, kind of long-term point of figure chart. So point of figure is great. It just basically moves completely on price. It strips out, completely strips out dates. All it looks at is, like, what's going on in the price section. So it's based purely on kind of, it's a great way to look at levels, basically. So as you can see, again, very, very weak daily chart. We've moved very, very fast to the downside. We did this before. We have done this before, obviously, and moved even further to the downside. So, we could potentially have an even sharper sell-off. It's not unusual. But then we did find, then in the past we have found, fairly good bouts of support. Now, in terms of kind of resistance levels to target now, again, as I said, there isn't that much on the way down, because we have had this really, really sharp move lower. You would maybe, obviously 130.50 is for the big guys, but in terms of the shorter ones, we're going to take a quick look at the intraday. Bear with me one moment. So this is the intraday point of figure chart. You should be able to see now. This is just a good way of kind of looking at, where potentially could we go in the very, very short term. So as I said, obviously that kind of 127.25 to 30 level, we could potentially see a pullback to there in the very, very short term. Then obviously this level here, 127.65 to 70 as well, ahead of kind of this support zone here, which is the 128 mark, so 128.05. So, 128.70 seems a very long way away right now. I'm preferring to, I think the environment is very, very uncertain, of course, so that we know that the uncertainty there, we know what the fundamental picture is like. From a technical picture, though, we've moved very fast, very quickly. So there's been a fast pace of depreciation in euro dollar. That's causing me to just kind of step back just a little bit and think, hang on a minute, we may have a pullback. We have in the past, even though we're still on this kind of downtrend, we may have a pullback as we edge closer to that 126.50 level. So in that environment, if you still want to go short, because it's very difficult, you don't necessarily, if you're a day trader, you may not necessarily want to go long here. There's nothing really to show you. Just made a new low of the day, apart from the fact that it's starting to look very oversold and we're kind of frontlining a little bit. There's no, who knows, there may be a stray headline out that could take you out of the water. In that environment, I would say narrow down your time frame. Just narrow it down. Don't try and have, you've got an awful lot of uncertainty if you're, looking to make kind of, looking for a bounce back all the way to 128.70 or all the way to 129 even. That's a lot. There's a lot of room between where we are now and where that is, and a lot can happen in that time frame. So now I recommend anyway narrowing down your time frame. Again, if we were to get a move back towards that kind of 126.95 mark, and maybe then that would herald a move towards kind of 127.30. And as I said, all these levels up here, all these resting spots here, they could all act now as very, very good resistance levels. So previous support will now act as good resistance on the way back up. But again, as I said, that's a pullback. That's not necessarily going to be a full-blown reversal in trend, because as I said before, this kind of funding crisis in Greece, where Greece is going right now, the uncertainty is still all there, and to me that's euro negative. Okay, I also want to show you a few other things. I know I spent a long time on euro, but obviously for obvious reasons, I think, and obviously it's really determining what's going on elsewhere. Now gold, just looking at gold, we're getting very, very close. If we just take a look at this chart here, we're getting very, very close to this 100-day moving average around the 1522 mark. 100-week moving average. I do apologise. very, very important level. Gold, again, it's being eroded. As I said, this dollar move is eroding some key levels across all asset classes, really. So this is really important. 1522. If we are to take, if the selling pressure or the upward pressure on the dollar is to take a breather at any stage, as I said, we are getting close to some important levels, be that 126.24 in euro dollar or 1522. Actually, we're closer in gold. Actually, as we've seen throughout the recent sell-off in the last couple of weeks, we've actually seen the commodity sphere get sold off more sharply, really, than some of the FX some of the FX crosses. So if we are to get a bit of a pullback, we may see it in gold first around this 1522 level, 1520-ish level, just ahead of 1500. Looking at a shorter time frame, as you can see on the daily chart, starting to look really, really oversold. So, that's happened in euro, that's now happened in gold. The RSI is respected by the market, it is looked at by the market. There are some, algo traders who would use these momentum indicators, and they would probably start to go long here, just looking for a bit of a pullback, potentially to that 1550 mark to start with. Looking at it from an hourly, again, kind of trading sideways. There's not too much to tell us at the moment. There's not much kind of on the way, as I said, apart from if you look on the kind of longer term chart, this 1522 mark. So that is definitely worth looking at. Do watch it. It is an important level. As I said, any pullback potentially to 1550. But again, gold is not acting as a safe haven. It's acting as a risk asset. It's struggling. Gold is struggling at the bottom of, it struggled. There was a bit of a tussle around the 1650, 1660 mark, but it really fell through the bottom of its kind of longer term range at about around kind of 1650, which is the bottom, 1615, which is the bottom of its Ichimoku daily cloud. And since then, it's really not looked back. Kind of a bit like euro, it's gone very fast, very quickly, or fallen very fast, very quickly. And again, that's just kind of, just some warning lights. Maybe now's not the best time to get in on the short side. Just wait for a pullback, or maybe trade it the other way if you're nimble enough. But this is this type of market where things are not necessarily moving in a straight line, is when you really do need to be nimble. That's kind of the most important thing. But that's what's great about FX as an asset class, is that you can go, there's always something going up in this environment. On that note, let's take a quick look at yen. Dollar yen, as you can see, the dollar has been, in the dollar yen's performance, in kind of recent, this is the weekly chart, let's get back to daily, in, the past kind of, few months, has been incredibly mixed. It started rallying really strongly in February when it looked like we weren't going to get more QE from the Fed. Since then, it kind of turned lower again. And now it bounced really nicely off support below 80. So that 100-day moving average here at kind of 79.80 has acted as really nice support. It's bounced off there. Usually in this environment, or with headlines like we've seen in the last kind of 24 hours out of Greece, or over the last 24 hours out of Greece, one would expect dollar yen to actually rise very, very sharply. So for it to be, for dollar yen to actually weaken and for the yen to rise very, very sharply. The reason why it's not is because of what's come out of Japan. It's not because of what's going on in Greece, or that there's, the yen is any less of a safe haven. It's more kind of manufactured by the central bank. Risks that the central bank in Japan will actually have to come in and provide more stimulus to the economy, which has also been kind of a big issue there. Now, someone's also asked to look at sterling. That's an important one. Yes, there is economic data coming out of the UK this morning. Does the pound really reflect UK economic data? Arguably, I would say no. We've also got the inflation report, of course, coming out as well today in the UK. Massive communication tool. Our view is that we're going to potentially see growth revised down a small bit. and inflation revised up a small bit. So not that much. We don't expect to see a huge change. We think that the bank is still going to be very concerned about the stickiness in inflation. But today at 9:30 anyway, the economic data is going to be the unemployment data coming out of the UK. That is expected to be worse than it was last month. So the March unemployment data is expected to deteriorate from February, with the ILO unemployment rate. So that's is expected to rise to 8.4 from 8.3. But the claimant count rate, so that's the April data. That's the more kind of timely data, if you like. So that's the number of people claiming the dole in the UK is expected to rise from or expected to jump by 5,000. So that's the jobless claims change for the month of April. So it was up 3,600 in February. It's expected to rise 5,000. But as you can see here, this is daily chart and cable and the cable rate. Again, the pound was very, very stubborn. It managed to hold up fairly well. It hasn't fallen nearly as sharply as the dollar, as the euro, and some of the other crosses like the Aussie dollar. What we've seen here is the 160 get breached very clearly. We've gone through some key support levels. There is still some key support levels on the downside. Obviously, 159 is a key level, but then below there we've also got 158.34 on the longer term basis. It also doesn't look oversold on a daily basis, so that just highlights to you the difference, the fact that sterling actually been performing quite well. One of the main reasons for that is that euro pound has been doing very well. Euro pound now is at its lowest level since November 2008, around about the 79.50 level. Taking a look at this just on a shorter term basis, again, it's starting to look very, very oversold below 159.50. So we wouldn't be surprised if we saw maybe 10, 20, 30 pips pull back towards maybe that 159.70 level. There is some kind of short-term resistance here at 159.95. But we think in the current environment that the dollar bulls really have got they've got hold of the reins. They're in power right now, and that is going to weigh very heavily on sterling and kind of limit its upside. So really anything now we're looking at is a pullback. But again, we may see that in gold, we may see that in euro, then we would also expect to see it in the pound. But it's been very interesting that cable has finally given way to that selling pressure and come under sharp selling pressure today. As you can see in this hourly candlestick chart, I mean, that is a nice move lower. That has been fabulous, from kind of 161 all the way down to 159.50, 150 pip move. I mean, you can't get better than that. And let's just take a quick look at euro sterling as well, because I know some of you have been looking at that. I've certainly been looking at it. We've called for this slow grind lower in it, potentially looking for kind of 75 by the end of Q3. We may be a little bit, it may happen quicker than that, who knows. But as you can see, a bit choppy, a bit more mixed. Below 79.50, we have seen a bit of a recovery, but this pair is getting chopped around by what's gone on in cable. So, the dollar has really taken, the bulk of the bullish appetite out there today. And that's been so strong. So that selling pressure in the cable rate, pushing it through 160 very, very quickly. Yesterday, and then obviously today, we've kind of dropped, the best part, kind of 40 pips already. That is even impacting euro sterling. So that's causing a bit of upward pressure on euro sterling. So again, will that maybe feed into euro dollar, because everything's kind of a bit fractal? Everything is a bit fractal in FX market. So we would say, this move back, we may run into a resistance just below 79.70. Again, it's going to be kind of short term, but potentially this strength in euro sterling on this mini recovery, if you like, in euro sterling could help push up euro dollar just a little bit. Because as we said, we don't think it's a turnaround. If we see a pullback, that's all it's going to be. It's not going to be, a massive change in trend. It's just going to be a pullback. And that type of thing could potentially cause, just the dollar bulls take a bit of a breather. Remember, yesterday, what we saw was intense selling pressure come in during the US session. So now we're in the European session. The dollar bulls may just take a bit of a rest, digest what's going on, wait for new headlines to come out. There's obviously a lot of economic data coming out today, not just in Europe, not just in the UK, but also in Europe with the CPI data and the trade balance. 10 o'clock. So it's all coming up. And then we've got housing data out of the US. But we've also got these Fed minutes this evening as well. Last time the Fed minutes were actually quite dollar positive. So do watch out for them. The risk is, of course, relative central bank policy is what's been a major driver of effects, along with Eurozone problems. But essentially what we may see is what we could see potentially is some a more kind of fundamental basis for a stronger dollar potentially regarding this regarding the Fed minutes. As I said, the one reason why the euro is weakening so sharply is that the problem is that the Eurozone authorities, including the ECB, only work whenever there's a catastrophe. However, it's a game of two halves. Someone's just mentioned something very pertinent. I'm just going to show you now just the dollar index, just how far it's been moving. Just bear with me now, one moment. As you can see, really, really nice move higher. Now this level here, this kind of 81.90 level, just ahead of, just below 82, really, really important resistance level here for euro for the dollar index. Someone said an interesting thing, maybe slightly controversial thing, that if we get further upside in the dollar, then the Fed might be angry, and it may implement more QE to bring down the dollar. Now we do know that there's kind of a wave of thought by some people who have been saying that that the Federal Reserve do tend to come in and kind of limit dollar strength. If they are going to do, if that is their policy, which we don't know. Remember, officially they don't target a currency policy in their. That's not part of the Fed's mandate. For some central banks, it is their mandate, like the SMB Bank of Japan. They target the currency level, and they are at the moment. But it's not meant to be so for the Fed. But if they did, say, for example, they were to do that, then they may decide to come in pretty sharply. Now, we know that they don't have another meeting until June. But it's definitely worth watching out for there. So really, really interesting times. You just can't get it more interesting times than we're seeing now. So as I said, overall, the outlook for the euro, the outlook for the outlook for the dollar crosses is very, very weak. We think there's going to be further weakness in euro dollar, further weakness in euro on a broad-based basis. But do watch out for those Fed minutes. Do watch out again as we edge ever higher in the dollar index. It may be worth just being a little bit cautious around these areas. As I said, we're starting to look very, very oversold on euro dollar on a daily basis. So it could be a bit of a pullback. Again, maybe 20, 30 pips would probably be about enough before we start selling again. So again, that one kind of 127.30-ish level is definitely worth watching out for as a key resistance zone on the way back up. But again, just a pullback, we think. The overall environment is so negative, so much uncertainty out there, so much opportunity for stray headlines to cause kind of dramatic turns in sentiment. But as I said, we did see yesterday that intense euro selling pressure come in during the US session. That may happen again. Obviously, that was also triggered by the announcement of the Greek election. So we've now had that data. We're still digesting it a little bit. We know it's euro negative. We're going to need something else to kind of see us back down to that low of 26, 24. So maybe it's something around who's going to win. Who's going to win that Greek election. If it's definitely Syriza, then that could cause a problem. Maybe it's going to come out of the Euro ECOFIN meeting, and maybe it will come out of the G8 summit this Friday. Who knows? But it's definitely keep an eye out. Definitely read the blog. Try and read our research if you can at forex.com. And again, as I said, forex.com is our Twitter name. So if you're on Twitter, then do follow us, interact with us online. Okay, guys. Thank you so much. I will see you again on Friday. So thanks so much for joining today. Bye bye.